So I've been getting a lot of requests for this video. I'm gonna tell you how to trade options on Webull with the most in-depth tutorial you can find on YouTube. And a lot of people have been transitioning from Robinhood to Webull for option trading because Robinhood sucks, honestly, and a lot of people got screwed over in the last couple weeks. So this is a great alternative that I'm gonna talk about in this video. I'm gonna go over every aspect of option trading, understand how to enter, exit, what it means, what the expiration dates are, everything, because I'm a professional options trader. I teach 100 people in my options trading group every single day. And hopefully if you want to join 7 days for free, you could be my next student. And a lot of people are gonna ask themselves, why do I need to trade options? Because stocks is so much easier. I can just buy and sell. I don't have to think about the expiration date, the strike price, you name it. And I'm gonna tell you right now, it's totally worth your time to listen to this video, understand option trading, because it can help you leverage small amounts of money to get those big account gains. And it's one simple fact that I'm gonna show you right now. So what you're gonna be looking at is my Robinhood screen. I know I'm showing you Robinhood, we're talking about Webull, but I'm doing a Robinhood small account challenge right now with my trading group. And right now we're holding Disney puts, Nike puts, we're also holding GLD calls. Here's the power of option trading. If I click this Disney puts, we have a 65 strike price put trading at $80. I spent 80 bucks. This is how many shares of stock I control with options. This is the power of option trading. So as you see right here for Delta is the number of stocks you control at any moment for this option. The max you can control is 100 stocks, which is the goal because that means you can leverage and get those huge returns, and 100 stocks is a lot. 1 penny, $1. I mean, that just is the most exciting part in my mind. So I control 8 shares of Disney for about $82. So let's do the math. Disney right now is trading at, I think it's trading at about 90 bucks. So if I head to my calculator, we type in 90 times 8, that's $720. So for me to control $720 with $80, that should explain to you the power of option trading and why it's so exciting. So that's Robinhood. That is the power of option trading, is leveraging small amounts of money to get those larger gains. Obviously, there's some things that are hard to understand, some things that can help you lose lots of money with this, but I just want to explain to you in this video how to use Webull and how to use that platform to understand buying and selling options and how to basically set up your account to do that. So what we're gonna do is head to the Webull app. And the good thing is it's very similar to Robinhood in the fact that everything's free. So everyone's using Robinhood because they can get free stocks trading, free option trading, they can buy crypto. Webull's gonna get crypto eventually, now they have options. So it's very comparable to Robinhood. So again, totally free, people flock to free things, but they don't know they're paying a price. That's what happened to Robinhood, unfortunately. Everyone went there because it's free, and then they realized when the market was volatile, things shut down, the platform didn't work. A lot of people lost money, they couldn't get out of positions at the right time, stop losses were hit that couldn't have been executed. A lot of reasons why people lost thousands and thousands and thousands of dollars just because they wanted to go to a platform that was free. Every great trader should go to a bigger platform, a better platform, Tastyworks, Thinkorswim. I personally love Thinkorswim, so don't cheap out if you want to do this professionally, but if you want to dabble, nothing wrong with trying out Webull, Robinhood, etc. So here we are on Webull, main screen. What you want to do is click that center button, that center circular button. This will take you to your account value and basically where you trade from. It shows you your positions and all that stuff. As you can see, I'm holding just a bunch of crap. I don't care about this account. I don't like the platform specifically, so I don't really use it, unfortunately, but I did learn the option intricacies, so I'm gonna teach you that. So as you can see, I got approved option trading today, and this is how you can get approved because every account isn't at approval. You have to ask for option trading approval to actually get it. That's because there's some, regulations going on in the industry where they want you to know how risky it is before you actually sign up for it. So this is how you sign up. You got to click more, and then on the more tab, you're going to click option trading. So once you click this, it's going to ask you about 5 questions. Once you answer all those 5 questions, it should give you access, unless you answer one question, all the questions like an idiot, where you're not looking to make risk, you're not looking to speculate. Basically, you're not understanding the risk of option trading. So if you answer all those questions like an idiot, they won't let you have it. So just let them know you know the risk. You know it's risky, you know it's speculative. So now we're gonna see the second screen. So this is once you've been accepted into the option trading program. You can see you can get to level 2 where you can sell calls and sell puts. I'm gonna click that. Basically, you just have to go through the questions one more time. General investment experience, extensive, obviously. Options investment experience, 5 years. That's actually true. Option investment objectives, speculation. That's option risk tolerance, high, super high. Looking to lose a lot of money today. Investment time horizon, short, less than 3 years. You know, this money's going in and out. So I save that and we complete. And I don't know if that was level 2, but that's how the form goes to give you option trading. Once you get approved, you'll see this cool little thing on your screen that says option trading approved. You click that and just basically tells you you have now been enrolled into this program. You can buy long puts and long calls. All a long call and long put means is you can play the direction in the market. A put means down, call means up. Pretty simple. So that is what you're accepted into. You can now play the up and down directions in stocks. So let's look at one stock, Ford. I'm interested in Ford options. I think it's gonna go up. And once it recognizes my face, it's gonna let me get to the screen. Once you get to this screen, you wanna click buy. And once you click buy, you can click the option section, which is in the bottom right corner. Bottom right corner, you're gonna see an option chain. All an option chain is, it gives you different strike prices to buy. It also tells you calls and puts. It's gonna be really confusing to look at in the beginning, but that's why you have a professional trader like me teaching you how to do it. So calls on the left, puts on the right. And at the top, we see the dates. This is interesting. This is why most traders will lose money. If you're picking expiration dates too close to expiration, those are gonna decay really quickly because every day options are losing value. Who knows why someone invented it this way, but I think they're just trying to steal your money. But every day they're losing $2,000 to maybe even $1,000 a day, depending on how much your option is worth. So that is why I tell people to go further out, because you're losing less per day. It's like the amount you lose speeds up as it gets closer to the expiration date. We never hold options till expiration. This is something every new option trader asks. Do I hold to expiration? Do I have to have it hit the strike price? No, you don't need anything to actually happen in that sense. You just need it to move in a direction in a certain amount of time. So if it doesn't move fast enough, time decay is gonna keep eating away your profits. But if it does move fast enough, you can sell it that day, the next day, for some insane profit. So option trading, all we're doing is playing directional bets and we're hoping it happens pretty quickly. If it doesn't happen quickly, that's where option traders can really fail. So at the top, we have just the different dates. And all these is gonna change. As you see, I'm just gonna go back to March 20th. The options on the left, yeah, these are a little bit hard to read. On the left are reading 40, 440, and then 230. If I go to the 27th, I'm gonna click that 61. This is trading at about $61, $59. The further you go out, the more expensive it's gonna be. So if your expiration date is further and further away, the price of the option gets more and more expensive. So $75 for that same exact option on the left. So we move up one more time. Now we're looking at $69. So the more time value you have, the more expensive the option is gonna be. But the options that are closest to expiration are actually gonna move the most when they do move, because they don't have a lot of time baked into the price. The time portion of that contract is just gonna eat away. It's gonna lessen the amount you can make, because that's not really controlling the leverage. The leverage portion is delta, and theta isn't really helping you make more money. It's actually helping you like lose money, lessen the gains. So that's not too exciting. But let's explain the option front screen. as we can see, if we scroll up and down, we get all the strike prices. And what I'm gonna do is just roll to a different option that's a little bit easier to see because it's more liquid. Because options, what we want to see is that bid-ask spread. We want to have it pretty close together. So unfortunately, when it's further apart, that's called, you know, the spread. If the spread's pretty far apart, that's how much money you could lose in just the transaction of the trade. So if I'm looking at these April 17th options, we're seeing these 29 strike price calls having a bid of 6.2 and an ask of 6.4. And all that is you multiply that by 100. That's how much it costs to buy that actual option. So I'll click that option for you. This is a call, and we're seeing at the top here, the mid is 630. So that means I have to pay $630 to buy this option. And it's confirmed by the bottom of your screen. You'll see estimated premium paid. That's gonna say 620 at the bottom. So whenever you see an option, every number that you're seeing, whether it's theta, delta, gamma, vega, you multiply that by 100, and that's what it is in dollar amounts. So for some reason, they wanted to make it more and more confusing for everyone to get into. But when we're looking at this expiration date of April 17th, you know, we see different strike prices. And strike prices are basically in the money, at the money, out of the money. And this is how you figure out what's in the money. Blue for Webull is gonna be in the money. Blue's in the money. That gray line underneath that blue box is out of, or at the money. And then we have that white, which is out of the money. So everything out of the money is gonna expire worthless by the time expiration comes. And expiration is just that date we talked about. So April 17th, when that date comes, all the options in the white are gonna go straight to zero. So this $30 SQQ call is worth $600. So 30th strike, it's gonna expire at April 17th, and it's at $600 right now. So that option is slowly gonna go from $600 all the way to zero in the next couple weeks. So that's the power of option trading, and that's the scariest thing, is that you're gonna lose value. But when you're selling options, this is when it gets interesting. So if you know how to sell options and do spreads and credits and all that stuff, I talk about this in all my other videos. You can check it out, and I'll actually link an option trading tutorial up top for spreads. But the spreads help you sell options and make money when they trade sideways or lose value. So it's really interesting when you get into selling options, because then you make money from that time decay, and volatility decreases or volatility increases. It's all good stuff for option traders. So again, here we are on the main screen. When we go to the right side for puts, everything above the gray is out of the money. Everything below in the blue is in the money. So in the money is gonna have value by the time it expires. For example, the price of SQQ right now is $29.30. So I'll click these $29 options. These are trading at $620. The difference, well, the intrinsic value of an option is the strike price minus the share price. So if our strike price is 29 and the share price is 29.30, the options are only worth $30. So by the time expiration comes, these options are only going to be worth 30 bucks. Right now they're trading at $620. So that shows you how scary it can be to hold these options, even if they're in the money. So you're not safe if you're out of the money, because there's still some time decay and volatility involved when they're in the money options. The way you avoid time decay is you just buy as far as you can in the money. And this could be those $25 calls or $20 calls if you can. I don't really see them available. So the further you go in the money, the safer it's gonna be and the less you're gonna lose per day. But now let's look at, so we looked at expiration dates, which are on the top. We also looked at strikes, calls, and puts. You can also change the view. You can do a list view. So this is very similar to Robinhood, and a lot of people like this. And it's pretty cool because Webull actually gives you the Greeks as they show you the list view. They show you the delta, which is how many shares you control with this option. So that 29 call we looked at is controlling 40 shares of stock. pretty cool. And again, I just changed that up here on the right. I click list view. You can do straddle view. I like list view because it's easier for beginners. And again, this gray line is basically where at the money line is. Everything below it is out of the money. That's where it gets dangerous to hold long term. So as you can see, these options are up about 10% today alone. So those options are moving, and we'll see them probably jump a lot more if the market tanks on Monday. So SQQ gives us implied volatility, volume, bid ask. It gives us a lot of great information on this screen right here. And that is the screen I would go with if I'm a beginning trader. But here's what happens. If I want to go for puts, I click over here. Now we're in the red. So red is puts, green is calls. This view is just so much easier to work with. And again, all beginning traders just can get their information really quickly with this. I'll scroll back up to the top one more time, and you can go all strike prices. That's the last thing I want to show you. And you know, I was talking about that earlier. The further you go in the money, the more you're going to control for shares. So let's just go back to that 29, and we'll go for calls. That $29 call is going to control 39 Delta shares. If I move up, let's go to a $5 call. It's going to control 100 shares of stock, and it has no theta decay, so it's not losing money every single day. But these options, they cost $2,400. That's a lot of money. But again, we're not losing money because there's no theta involved. And by the time we see theta start growing up is around $12 for those calls right here. So the Greeks are super important. They really help traders understand the risk in this scenario. Delta, how many shares you control. Basically, when the stock moves $1, how much do you make? If you control 100 shares and it moves $1, you make $100. If you control 100 shares, it moves 50 cents. Now you control, now you're making $50. So basically, how much you control decides how much you're making when the stock moves. And here's the cool fact that not many people talk about is when you get really large movements, like multi-dollar movements, you're gonna see like a $32 call that was controlling 24 shares. Eventually it's gonna start controlling 40 shares of stock. Eventually it's gonna start controlling 60 shares. So the further it moves, the more and more shares you control, which is a pretty cool thing with option trading. And this is why you can make tons of money, because the larger movements, the more and more money you'll make. But when it moves against you, you don't really lose that much because it doesn't decrease as fast. So it increases much more faster. You control more shares, you make more with sudden up moves. But when it drops, it doesn't really drop as quickly. So long term, the risk reward ratio is just amazing when it comes to option trading. So that is the main screen. Those are the couple of choices you can have when it comes to the strikes that are displayed. If I want less strikes, I can go to 6, and it just gives me less to scroll through. We got calls and puts. I can't switch from that because I don't have level 2 access to straddles, strangles, spreads. And we also have the list view, straddle view, ascending, descending. You can just do a lot of things. And once you get really good at this, the straddle view is what the best traders use. So straddle view is just a little bit easier once you understand it. But I do like the list view for beginners, even intermediate traders, because it does give a lot more details. Now let's go to the order screen. What are we doing with Webull with ordering this? So if I'm looking at this $29 strike SQQ call, again, the strike doesn't really matter. All that matters is how much money we're losing per day and how many stocks we're controlling at this moment with Delta. So strike price doesn't matter. Expiration date, it only matters if you kind of have a clue on what time your move's going to happen in. So if I'm looking at the weekly chart, I think we're going to move next week. I might use next week's options, or I might use the week after's options to be more safe, or to be super safe, I might use options 3 weeks out. Let's say I'm looking at the monthly chart. I think we're going to move next month. I have to use options a month out, or 2 months out, or 3 months out, or 6 months out to be super safe. Now let's talk about the 5-minute chart. if I see a move that's going to happen in 5 minutes, I might be using options expiring tomorrow or options expiring next week. If I see a move that's going to happen in 5 minutes, why would I buy options 6 months out? They're more expensive. I make less when it moves. It doesn't make any sense. So for option traders, I think it's super important to know the timing of your move. Just have a general idea in the back of your head what's going to happen with that move and what time it's going to happen in. So that's my only advice for strike for expiration date. Now let's move on to actually entering this trade. So what you're seeing right now is the spread, which is going to be the 620 and 640. So we got the green, which is the left side, and the red, which is the right side. And the spread is basically where the buyers and sellers are. So the buyers are trying to buy it low at $620, and the sellers are trying to sell it high, which is $640. Obviously, sellers are selling it higher. If they're selling it lower, there would be no sellers because everyone would be buying. So as you can see, green, left, buying, right, red, selling. Now we move on to the risk profile. It just shows you what could happen in this trade. So if you bought, let's say at $620, your max loss, $630, your max loss is $630. Pretty simple. You cap your losses with options. That's why it's so amazing. But your gains could be 1 to 1,000%. Just in my trading group last week, we had 1,000% runner in Zoom. It actually ended up being a 1,500% runner at the very last day. So you can't get that with stock. And that's why options are so amazing. If you made 1,500% in options, guess how many losers you can afford? A lot. You can afford to lose a lot more times in the future if you just have one big runner. So that the safety with options when it really starts running is amazing. Now let's move back to the risk profile. How much can you make from this option? Unlimited. How crazy is that? And hopefully I proved that to you with that 1,500% example in a 2-day holding period. You can make so much money with options, it is ridiculous. You could turn $5 into $20,000. Not kidding, I've seen it happen on the option chain. I haven't done it personally. It's a goal of mine though. The next thing it's gonna give you on the risk profile is 2 more things, the break-even point, and then the last point it was trading at. So we have the break-even point being 35.30. So this 29 strike price option, if we don't want to lose any money and we want to have this option expire where we bought it at, which is $630, by the time expiration comes, this is what we're talking about. For the break-even point to make sense, we need to hold it all the way to expiration. So if we're holding it all the way to expiration, we need that move to happen to 35.30 because that is where we won't lose a penny, and when it expires, we'll get our money back 100%. But here's the thing, traders never hold when expiration happens. They're always selling by the time expiration is done. So a day before, a week before, 2 minutes before expiration. That's why the break-even price I don't care about it. But just for reference, it's showing you how much of a move you really need. So you need a 20% move in the SQQ for you just to break even. So that's a pretty large move. And even if you got a 10% move next week, you're still gonna make money even if it's not at your break-even point. So if you beat the clock, you can be profitable as an option trader. But if you don't beat the clock, that's where you lose. But if you end up coming till expiration, right to the point where the break-even point is, you won't lose a dime. So there's also a lot of different factors with that. But again, risk profile just shows you break-even point, unlimited gains, max loss is what you invested, and then the last price is where it's trading at currently. So right now we're at $29.30. It's just showing you how much you need to move between the last price and the break-even, just to see how much of a percentage gain you need. So again, the next thing we're gonna do is the side of the contract. If you wanna sell, that's called shorting. And again, that's more profitable than buying sometimes. But for me as an option trader, I'm buying, and a lot of my group members are, and we're making a killing. So I'm gonna teach you buying right now in this episode. So we got buying. Next thing I'm doing, I'm click the contracts. This is how many contracts you wanna purchase. You could do 5, and I don't see an enter button. There we go. So we'll buy 5 contracts, And limit, what does this mean? Order type, limit, market, stop, stop, limit. Here's the thing, stop and stop limit don't make sense when you're buying, because that's for people who are taking losses. We're not taking a loss, we're trying to buy and enter this trade. So you only have two choices, limit and market. Market is gonna fill you at the highest range where the sellers are. Sellers are at $640. If you click buy 5 at the market price, you're gonna get filled at $640. But here's the problem. The spread is $20. So every contract you're losing 20 bucks by buying at the highest possible price. 20 bucks, 20 bucks, 20 bucks. That's 20 times 5, looking at 100 bucks lost. So what you could do to lower the amount you're losing is try to enter at the lower half of the spread. So I'm gonna go limit, and right now we're trading at about 620, 630. I would click 625 to be safe. So it doesn't let me. I have to go in $5 increments, unfortunately. So now I'm gonna go 630 because I know people are trying to buy at 620. If I'm trying to buy at 620, I go at the back of the line. So I won't get filled until everyone in front of me gets filled. And that's the problem with buying at the bid price or the ask price. When you're trying to buy there, you have to wait for everyone else to get filled. But when you put your order in front of that person, you're the first person to get filled. So you have to be in front of the buyers in the market. That's how you're gonna get filled. That's how you're gonna get into this trade the quickest. If you wanna get into it as quickly as possible, just click market order, but you're gonna lose a lot of money, and especially if the spread is large, you're gonna lose a lot of money. With Tesla, you could be losing $2,000, $5,000 per order just from the spread getting wrecked. Limit, so we'll go back to limit. What we could do is go to 640, 630, or 620. Those are your options. And depending how it moves throughout the day, you could get filled, easier or harder. If it made a quick upward movement when you entered, you won't get filled. If it made a quick downward movement when you entered, you're gonna get filled, but you're gonna see a lot of losses. So that's the problem too. Now let's type in time in force, day, and we don't have good till cancel. Interesting, so you can't do good till cancel on Webull with options. I didn't know that. So we have our contracts, our limit price, everything's good to go. Now I just click buy. And it's gonna tell me supported, not supported now, needs to be during market hours. So I guess that's why they don't do good till cancel. They want you to be trading and putting these option orders when the market's actually open. So that is Webull options. And again, you have to apply for it. You have to go through the stocks you want to buy, pick the right expiration dates, the right strike prices, enter. And once you're in the trade, you can pick stop loss, you can pick stop limit, so you can protect your losses. So when you're in an option trade, you might want to get out at 50% loss. And the way you do that is you put stop limit or stop loss. And that works the same way as market and limit order. But again, this is Webull, completely free, and it's definitely a good platform for beginners to jump on. Robinhood becoming less and less popular. I think Webull takes some market share at the beginning as we start continuing. But what I want to show you is a video on the best trading platform, which is Thinkorswim, where all the professionals go. To the right of you. Stay tuned. When you first get started out in the stock market, the very first thing you have to figure out is which platform you want to start trading on. And if you make the wrong decision, you may be missing out on certain